Good evening, traders. Douglas here. Today I'm going to show you how you could have caught the bottom and the top of these moves using hidden orders from Bookmap. All right, so if we look at the chart, this is the trading view chart of May 18th on the ES, the S&P 500. And what you're going to find is as it came down through the morning, right here, we had a very large iceberg hidden order. And then right here, we had a nice sized, not massive, but a nice sized stop run that sent it back the other way. Now, eventually throughout the day, it absolutely dropped, but you could have certainly caught this move down, which is about 8 points, and this move up, which is 10 points, not ticks, points. Okay, so that would be 40 ticks in the ES. So let's get right to it. And I'm not going to play this whole thing out. I'm just going to show you the aftermath to keep things short and simple. So here we have the ES chart in Bookmap. And if we zoom in here, that's too much. We're going to see that price was coming down early in the morning. Down, 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 down. And so you're going to think I should stay to the downside, which is a very smart thing. You want to stay with momentum. You want to stay with the flow. You don't want to try to catch tops and bottoms. But why are tops and bottoms so tempting is because they can give you some of the biggest point runs if you happen to catch them. Well, it's much less dangerous trying to do so if you're using Bookmap. And so what you'll notice here is you have real early on after the open, you've got this bottom here, and then it just goes slightly below it here about 15 minutes later. And so really you could call this, let's get some drawings going. You could basically call that a double bottom right through there. And so you're kind of looking for it to maybe bounce here if you're looking for the top side. But the fact that it broke through and then hit this iceberg, okay, so that's a 3,000 iceberg. That's 3,000 hidden orders from a big player. Retail players cannot make these kind of big orders, you know, after it breaks that low. And so not only would it have busted through, and you can see the stop run here is in red, the stop run's in red. So 374 stops were hit because people were probably trying to play this bottom, and then they were trying to play this bottom. So their orders are hidden somewhere, and not hidden, but their stops are sitting somewhere in this area down here, you know, trying to play to the upside, these type of traders, right? And then it comes, breaks through them, and then you probably get the breakout traders selling right here as well. And what they don't know is they've sold right into a trap. So not only have they pushed through to run the stops, but they've also brought in the breakout traders and trapped them that run right into a brick wall that nobody can see unless they're using Bookmap. 3,000 orders trigger right here, along with 360 some stops. And let's get the drawing tool off of there. And it starts working its way back up. And that's that 10-point run I was talking about. I mean, that's a real nice opportunity, right? With very little risk. Because if you're going to get in here somewhere, you know, wherever you're comfortable, whatever your strategy is, maybe you try to get in right away. That's more aggressive. Maybe you try to wait for the bounce, try to get in somewhere there. Maybe when these, that's a real small iceberg run right there. But maybe when that triggers, you try to get in and put your stops down here. But you have a place to hide. You're going to hide behind that iceberg level because you can assume that this big player probably wants to defend that zone, right? At least as long as they're in this trade. And that's still pretty early on. So it runs up 10 points, and you'll notice that it's leaving behind some untriggered icebergs. That's what this line is. That means this hasn't finished its business yet. And then again, right here, this is a much smaller player here, or it's remnants of the large iceberg. But that hasn't finished its business yet. And what you're going to find is a lot of times price will come back to finish that business. We have another iceberg, pretty good one here, triggers at 550, but that's near the top. And then you get this stop run right into resistance, right? We had resistance here, broke that resistance, ran into another level of resistance. That's what these highlighted areas mean, that there were more people, more liquidity in the book, more people waiting to trade. So that can be a level of resistance. And then you get a 400 stop run right there. Stalls out a little bit. And then it starts its down move, comes back, refills those unfinished icebergs. And then as you saw from the chart earlier, throughout the day, it just keeps dropping. Now, I didn't record anything past that. I was done trading after the morning, so I don't know what kind of icebergs and stop runs happened after that. But I'm sure other players came in and more things happened to keep that push going further and further down. But if you need Confluence, the stops and icebergs, of course, are a great place. But if you go to the QQQs, which they don't track exactly with the ES, right? They're kind of their own thing, but they usually, most days, track very, very closely. Okay, so if there's a major spot in the QQQs, it usually correlates with a major spot in the SPY or the ES. Okay, so if you come over here to the QQQs, what happened, this is where that 400 stop run happened and then it died out. So you'll find this happens a lot. So over here in the QQQs, which is a major ETF, you had all this liquidity up here. This major player wanted to play up in this zone. And price tends to be attracted, especially when there's nothing else going on. I mean, if there's a lot of different zones, then who knows, right? But when there's just one lone big dude sitting out there, price tends to track to it like a magnet. He got filled. After he got filled, he was happy. And then the sell-off happens, right? Because this is sell orders that this person wanted. So they might have been the iceberg player. They might have had that iceberg right there to drive price into what they really wanted, which was to get filled all their sell orders up here, because these major institutions have so much to move, so much buy and sell orders that they need to move, that they can't just do it at once. You can't just click a button like if you're trading one or two contracts, right? Trading thousands of contracts. You can't just, if you want to get your price, you can't just trigger all of those willy-nilly, right? You've got to make things happen to get your fill. Okay, so pretty good chance that it was the same player, same institution, whatever it was, drove price up into where they wanted to get filled. After they got filled, market dies. Now, if that wasn't enough for you, we can go over here to the Spies. Much harder to see, right? Not much of a highlighted area, but Spies run up into this slightly higher area. Everything's kind of dark here, but you can see that line up here, runs right into that wall, fills some of that, and dies off. Okay, so that's how the market works. It works like that every day, where people, the major institutions, the big players, are driving price back and forth into their orders. All right, because they want to get filled, and then after they get filled, something else will happen. Now, it could have happened that the market was just a freight train, went up, hit that level of liquidity that we saw in the Qs, paused out a little bit. There's usually going to be some sort of reaction, and then could have continued on up for the day. So this is, nothing's magic in trading. You can't guarantee anything, okay? But this is the ebb and flow of the market. This is how it works. You see it in the book every day. And you'll start to get better when you start learning kind of these flows that happen. All right. So if you have any questions about that, leave them in the comments below. Happy trading, boys.